All right, good morning. Welcome to Chartbusters. Well, this is the show where we'll highlight all the buzzing stocks. We'll also get you a trade on the Nifty. I'm Nigel D'Souza, and with me today, Mangalam Malu. Hey, Mangalam, we started off more or less flattish. We're still more or less flattish, actually. We're holding in the green. And the Nifty, in fact, I think mildly higher now as we speak. The rupee as well, more or less stable. That's good news. I was wondering what was going on. 71.8 is where it closed at yesterday. So we'll keep an eye out on that one as well.
Absolutely. 71.8 still would be slightly weaker than what we did, earlier. So which is what is explaining the sort of moves that we're seeing in a couple of these IT stocks. Hexaware is at the high point of the day. Yes, mid-cap index is underperforming, but a lot of them are moving higher as we speak. We have the likes of Ashok Leyland, which has moved to the high point of the day. Petronet, LNG, Raymond too doing well. So let's see how this goes. But as of now, absolutely flat. First up, all the top stories that we're tracking. Moody's downgrades Bharti Airtel's unsecured senior notes rating to junk. The stock is the biggest Nifty loser. Downgrade is due to uncertainty on whether profitability, cash flow and debt levels can improve sustainably and materially.
And in the boost for Dr. Reddy's, Indivior loses bid for re-hearing in the Suboxone case. Now, Indivior's appeal was reinstated ban on Dr. Reddy's from selling the generic Suboxone in the United States. The final mandate by the US court on the case will be on February 11th.
IRB Infra loses margin miss in the third quarter, derails the top line growth. Build, operate and transfer segment grows around 16% and construction is up 48%. Citi has a call. They say valuations leave little room for upside, cuts target to 139 rupees. Management tells CNBC TV18 that they expect improvement in toll revenue in the fourth quarter.
And Whirlpool slips, the margins miss estimates in quarter three, but the net profit rises by around 14% on a year-on-year basis. Jefferies reduces, in fact, has a reduced rating from buy to hold, and they cut their target price as well to 1,625 rupees.
Jubilant Food loses in trade today as the National Anti-Profiteering Authority finds the company guilty of not passing on tax benefits of rupees 41.4 crores under the GST regime. The company clarifies that they have passed down the benefits of GST reduction to consumers.
Well, let's get straight to our first corporate that's standing by. We have Shrey Infra. That stock is under pressure on the back of a weak showing in the quarter three with both weak disbursements as well as profitability. To discuss this and more, we're joined by Mr. Hemant Kanoria, the chairman and MD of the company. Hi, Mr. Kanoria. Thanks so much, sir, for joining in. Give us a couple of details. What were the NIMs, in the past quarter? And if you could give us a comparative number as well.
See, on the NIM side of it, there has not been much of a drop. It has been just very nominal. But what has happened is that we have, because as you know that what had happened in the market with the ILFS and all in September, and because of a little bit of an topsy-turvy market for the NBFC, so we thought it was important for us to conserve the cash and see to it that everything is stable. And that is the reason why we did not do much of disbursements in the last quarter. And definitely the disbursements are not there to that extent. It does have an impact on the profit. So therefore there was an impact on the profit. But what was more important for last quarter as a strategy for us was to have enough liquidity, not only for meeting the liabilities which are coming in, which we were very comfortable with, but also for the future. And that is why for conserving cash, we thought that it is much better that one quarter not to focus on the disbursements to that extent. And that is the reason why it had its impact.
Okay, Mr. Kanoria, we take that point because disbursements, as you're telling us, it was a calculated move to conserve cash. Now, going ahead, what kind of outlook can we look at in terms of disbursements, and give us some guidance as well in terms of those margins?
So basically, the margins are intact. So therefore, the margins are not going to be affected. As a matter of fact, that our quality of portfolio has been improving from quarter to quarter, and that we have seen successively in the last 3-4 years. So we will continue that path. On the disbursement side, we will be cautious. This quarter also, we would have a larger disbursement than the last quarter, but we will not be going all hog on the disbursement because now we are also going to get into an election mode. And
some
we are
guidance,
in the interest space.
Mr. Kanoria, if you could give us some numbers. Quarter four, we're getting that point. You're saying let's not go out there and just lend
numbers will
widely.
be very difficult for us to say, but I can tell you our disbursements will be higher than what it was in the last quarter on a cumulative basis, but at the same consolidated basis. But at the same time, because we are now going to move into election mode from March onwards, and this is the last quarter. So therefore, we are in the infra space, so we will be cautious in our disbursements. We'll see how the markets are moving, how the elections will be turning out, how the things are moving in the various states and all. So therefore, this is the time in the next couple of quarters to be cautious in our disbursements, because we are a long-time player. It has been 30 years for us. So, we have seen all these ups and downs.
We're still not getting that number, Mr. Kanoria.
Mr. Kanoria, if you could give us that number?
Number will be very difficult for us to say. I can only tell you that it will be higher than last quarter of the business.
No, last quarter was so low, so anything from there will be good, but at least some sort of a number. I think the last quarter disbursements were down close to around 33% on a year-on-year basis. So if you could at least give some sort of a range, as you're saying, you've been in the business for a long time, for the last 50 years, you're focusing on business, not lending irrationally. So give us at least a broad range. We'll try this last time at least with you.
No, it will be higher than last quarter. I can only tell you that. But
let's move on,
unfortunately, we will not be able to give you the number.
Move on.
Okay, Mr. Kanoria, so you're not giving us any outlook as far as your disbursement growth is concerned. So let's talk about your expenditure. I'm looking at your interest expenses, which are down 21% quarter on quarter. And remember, this is a time when across the industry, we saw interest expenditure increase. So how is it that only your interest expenditure declined quarter on quarter? Can you explain that?
Basically, the main reason has been that many of the companies, they had to go in and borrow because they were having a short-term, they were borrowing short-term and lending medium to long-term. So therefore, they had to immediately go and borrow in the short-term market, and that is why the interest rates increased. For us, as we have been maintaining and mentioning continuously, that we do not have an asset liability maturity mismatch on the tenure side of it. So that is the reason why that when we don't have to go around in the market to borrow in the short term at a higher interest cost. That is the reason why our interest cost. And also what has happened is that we had increased the interest to the clients in the month of November in Shrey Infra and Shrey Equipment from the 1st of January. So we will see an impact on the increase of the income. So from the income side of it, our income will increase, but on the cost side, our interest cost is not going to increase because we are very well matched on the maturity.
So does that
is the main reason.
So does that mean your operating profit will improve, because in the previous quarter it was down about 20%?
It will. Definitely.
To what level?
So you're absolutely right that it will improve the operating profit, because ultimately it is one that you can either grow your disbursements and increase the profit, or reduce the cost. And we have been concentrating on reducing the cost from last quarter onwards. But there is always a lag of a quarter. So this quarter we will see that there has been a reduction on the cost, so therefore the profit will grow.
Mr. Kanoria, you're saying that you have increased your lending rates, right? In the month of November?
We have declared it from November and January.
So tell us, what is the current rate on your advances? If you could help us out with that number, what was it? How much have you increased it to?
We have increased it by 2%, both in Shrey and Shrey Equipment, Shrey Infra and Shrey Equipment.
So what is the number? What is your total lending rate as of now?
So basically it will vary. It will so for each of the clients we have different lending rates depending upon the risk, depending upon the business in which they are in. So 2% increase has been there both in Shrey Infra and Shrey Equipment across the board. Some people were having an interest rate of 10-11%, so that will increase. Someone was having at 12%, so that would increase by 2%, depending upon the risk.
What's your borrowing mix, Mr. Kanoria? Because you're pretty confident of keeping your current interest rates low. In fact, the interest that you spend, and you are increasing your lending rate. So if you could give us some color on your borrowing mix and your average borrowing cost.
So basically, our average borrowing cost is varying between in Shrey and Shrey Infra between 9.5% to 10%. So in Shrey Equipment, it is 9.5%, 9.28%. To 9.3% to be precise, and in Shrey Infra it is about 9.8%, and our borrowing mix is quite good because we have banks, we have ECBs from the international market, we have domestic bonds, we have term loans, we have various other institutions, insurance companies. So we have a good mix on the liability side, and that has been one of our major strengths.
All right, quick question before we let you go. Mr. Kanoria, the way you're sounding, if you were an analyst on your own stock, everyone would come in to buy, but the stock price is not indicating that. But finally, before we let you go, what's the current gross NPAs? If you could give us a sense of the asset quality?
So basically, our consolidated gross NPL would be approximately in equipment. It is approximately about 4.4%, and net is 2.6%.
And this compares with what, quarter on quarter?
And last quarter, it was last year's same quarter, it was 4.2%, and net NPA was 2.6%. So it is more or less stable.
And this year, quarter on quarter?
So this year, quarter on quarter is about 4%. More or less, it is about 3.8 to 4%. So each quarter, it is varying in 2.5, 2.6. So it is stabilized at that particular level.
All right, Mr. Kanoria, thanks a lot for joining us. Refusing to divulge details in terms of disbursements for the next quarter. Remember, disbursements were down 33% in the previous quarter, and the management says he's cautious in the fourth quarter as well. The stock down 3.5% after declining a 45% in the last 1 year. With that, we move on to Ashwani Gujral for a quick technical check on the markets. Ashwani, absolutely flat for the Nifty as we speak, though a mild recovery seen. Nifty Bank outperforming a little bit, but the mid-cap index still underperforming.
Well, today is a bit of short covering happening on those beleaguered stocks. So Diwan Housing is higher, Z is higher. So my sense is that today from the lows there is some buying which is visible. You are right, Bank Nifty is outperforming. So this is a good time to get long on the Bank Nifty. Nifty not as much, but it appears that possibly banks could move higher in anticipation of the policy, etc. Also, ICICI Bank was down like 1.5%. That has come back fairly strongly. So people who want to buy into this sort of bank or, long-term bulls here, they can get into ICICI Bank. Having said that, on individual stocks, Bajaj Finance is a buy with a stop of 2600, target of 2720. IndusInd Bank is a buy with a stop of 1500, target of 1575. And Yes Bank is a buy with a stop of 179, target of 192.
Ashwani, any view on Raymond? The stock has gone to that 800 rupee levels numerous times and done a U-turn from there. Last few minutes, there's been a bit of a volume spike out there, and the stock as well has moved towards the 750. Avoidable, or would you trade it?
The issue here is that mid caps are often showing one-off action, and then there is no follow-through. But I don't think it will break recent lows of about 600. But I won't get too overexcited also, because there is no interest in mid caps. You have to stay with large caps, FMCG, those smaller consumption stocks if you have to make money.
All right, Ashwani, disclosures?
We have long positions now on Bank Nifty.
Okay, thanks a lot for joining in, Ashwani. We'll keep coming back to you through the course of the day. With that, we also slip into a short break and come back. On the other side, we have KEI Industries, the next stock on our radar, on the back of a mixed set of third quarter earnings. We'll get chatting with Anil Gupta, the chairman and the MD of the company.